Good morning and welcome you all to Narnolia Securities Weekly Market Outlook. March 2014 will see start of Festival of Democracy in the world's biggest democracy. And for a while, issues like global events, local macros, earnings will be on the back burner. This surely will be a respite, even if temporary, to the Indian investors and traders who had been long fighting with issues like Fed tapering, China hard landing, EU crisis, geopolitical crisis and domestically policy paralysis, institutional breakdown, misgovernance, high inflation and other poor macros. In fact, improving macros like current account and earnings growth upgrade makes the pre-result rally more real than a mere expectation rally. What makes the election even more important from market point of view is that whether the coming government will be a lean one or not. And one need to be very vigilant here in case election throws another spell of policy paralysis cycle. Because that should imply continued stagflation-like scenario in India, as macro policies then will remain focused on redistribution of income instead of accelerating productive growth. Populist policy also ensures that productivity stays low. GDP growth is a combination of population growth and labor productivity growth. And populist policies at this juncture will surely reduce productivity further, and this will be a huge demographic disaster. To us, this election is about whether India could utilize its demographic advantage or not. Coming to market last week, both Nifty and Sensex Midcap Index went up by almost 4%. With this, both Sensex and Nifty are decisively at all-time high. And that should surely help investors take smart decision about right way of investing in equity market. Friday was quite disruptive in the sense that intraday there was a time when Nifty was up by over 1.5%, but Sensex Midcap was down. Though maximum traction was in Bank Nifty that was up by over 5% just in a day. And on a day of such fast and furious gain, technology and pharma stocks were down. Sensex IT and Sensex Pharma Index both were down close to 2%. This surely suggests that money is changing hands from weak rupee theme to strong rupee theme. Our view too is that this should be the right churn in the medium term. We opine that once this pre-election wave of rally holds and earnings get prominence, particularly in the second half of April, these IT stocks will give good appreciation. If IT stocks rally further by say 5 to 6%, around March end and or April first half will be the right time to buy IT stocks back in one's portfolio. Also, as the characteristics of the current rally can be called beta rally, one should trade long but should avoid leverage. Stock specific, we recommend Eros Media. The company has healthy movies pipeline for FY15. The company is expecting to release more than 8 big budget movies across Hindi and regional languages. Management is very excited to invest into different medium like internet and launching channels to generate revenue. Company's optimistic stance towards maintaining margins, strong movie slate and very low valuation makes attractive. We recommend buy with 1 year price target of Rs 200. Thank you and wish you a good trading and investment week ahead.